Most new traders are obsessed with the amount of money they can make, but professional traders are obsessed with how much money they can lose. The secret to long-term success in this business is not about hitting home runs. It is about protecting your capital. In this video, I'm going to share my complete risk management system, including the #1 rule that has saved me from blowing up my account more times than I can count. The thing with trading is there are so many courses and so many people promising the world, like 600% in 5 minutes, or let me teach you the strategy, we're going to have 90% returns. But the truth is that a lot of people are not teaching the right risk management, because the first thing that you need to think about is the market is something completely new to you, and if you don't know anything about a subject, you're not going to go and operate on a table. If you're an intern for the first year, you're probably going to have to go through maybe 8-10 years of hard studying before you ever operate. The same thing goes in trading. Is very accessible. You can get a computer anywhere, you can open a platform anywhere, and all you really need is a couple $1,000s, and there you go. I am a big fan of rules, and I know rules are very hard to follow. Since we were kids, we were already avoiding all of the rules. We're already telling our parents that no, we didn't do this. Since the beginning of time, we have been avoiding rules, and they're not easy to do, but they are the ones that are going to make you either a failed trader who blew up their account countless of times, and that'll be the difference maker between the person that lasts for a long time and the person that quits in the first few years. Because what you can keep is the most important, and the only way to keep the money that you make is creating very hard rules. Because the things trading, and why you need to have such a defense mechanism with trading, is that it is all emotional based. You can know the executions, you can know the platforms, you can know the strategies, but when our emotions are in play, that is when all of this knowledge goes out the window, and now suddenly you are revenge trading, adding to losers, holding and hoping, creating these huge snowball losses that you never knew you could even do. Why? Because you didn't create rules in the first place. And that is why risk management is the #1 key rule that I have to be disciplined, and it is the only thing that helps me stay consistent. Because if I did not have risk management, I wouldn't be here today, and neither would all of the other traders that are successful in this business. Because if you can be consistent for a few days in a row, and then one day you have a bad loss where your emotions are full force, everything is wiped, and now you're left with nothing, or even worse, a blown account, and then you really can't get back into trading. So I want to share this and make sure that you understand the importance of always being on the defense, making sure that you understand that trading is dangerous. It is hard-earned money, and you're putting it all on the line, and you're just hoping for the best. No, you need rules right now, and I'm going to explain every single one that I have right in front of me. Sometimes I have it on a post-it, sometimes I have it on this notebook right here, this notebook, and all I'm doing is I am trading, and I have this right here next to me, because this is the most important thing, nothing else. I will not lose more than 2% of my account in one trading day. So what that looks like in numbers: if you have a $10,000 account, you should not be losing more than $200 a day. If you have a $20,000 account, you should not be losing more than $400 a day. If you have a $30,000 account, you should not be losing more than $600 a day. So the moment I hit that number, I walk away. I leave. I take all of the emotions out. And to set a max stop loss, you don't even have to do it yourself. You can tell your broker, stop me out when I am down this amount of dollars, and once they stop you out, don't change it. Just leave it there, because that will save you from so many losses in the future, just like it saved me. And there's always going to be a voice in your head telling you, well, what if the next trade is going to work? Try it one more time. Take the stop loss out. Message your broker and tell them that you no longer want that, because we've all made those mistakes. I have been in those mistakes, and I know exactly how it feels to believe in that trade so much. But I once heard this, and I don't remember where I heard it from, but I once heard, if you got out of the trade in the first place, what makes you think that 8 seconds later it's going to be a better trade? That is completely true. If you just got out of the trade, it's probably a terrible trade in the first place. Walk away. Take all of the emotions you can as possible. Close the laptop. Go get a drink. Go walk away, because all of the emotions are still going to be there, and you're still going to be believing in the trade. But all you're going to do is make that loss bigger, and then you're just going to end up regretting it, because we've all been there. I've been there way too many times, and that is why I created this rule, and that has saved me from multiple trades that in the past I would have made the same mistakes, and I would be like, why did I do that in the first place? And the other day I was trading GLMD, so it was following my plan perfectly. It was a percent gainer, it had volume, it had risk for me to risk off of, and I was thinking it went up all the way to 126, and then it came back down. It started basing around the 110 level, so that was the level that I was risking off of. And then once it started like curling back up to high a day, that is where I got long. I was risking that bottom, and then it rejected. It was very heavy, and then it could not get through that high a day, and I got stopped out for like $150 loss. But right now it is trading in the 70s, so I could have probably lost $3,000. That is why having a hard stop is so important, because these stocks are very volatile and they can be very dangerous, and sometimes they work out in your favor, and this could have gone to 2, 3, 4, whatever it is. But sometimes when they fail, you don't really know what's going to happen, and it can turn into a $3,000 loss if you do not manage it well. And that is why it is so important to understand that the stock market is volatile, and if you don't have good rules, it doesn't care to take your money. So having a hard stop will reduce those emotions. It will make you more disciplined, more consistent, because you are not letting it become a $3,000 loss. I will gladly take that $150 loss, and then the next day I made 500, so it all evened out. But if I lost 3,000, think about how many trades I would have to take to make that back. A mental stop, it is exactly what it sounds like. A lot of traders use this method. It is when you trust your process, your emotions, and the losses enough to be able to execute your trade manually. So if you're faced with a loss, you trust yourself enough to get out at the price that you said you would. Now, a hard stop is an order that you can place that will automatically do that for you. The beauty of a hard stop is that you don't have to think. All you do is place the order, and it will reduce all of the emotions. All it's going to do is just execute it whenever it hits that price, and you know that you followed your plan exactly. I recommend hard stops, especially if you're in the beginning, you don't trust yourself, you don't know what's going on, and you don't really have a set plan in mind. So make sure you understand your risks. Make sure you understand before you place a trade where you're going to stop out, because that is going to be the only thing that's going to make you disciplined and consistent and not wipe out months of hard work. And this is also another trap that we fall into. Let's give this trade a little more room and see what it does. Once that is your mindset, there is no more plan. The plan is hope. And hope is never the answer for discipline and consistency. Now let's talk about position sizing. I like to keep the account small at 30,000. I don't need any more to be disciplined and consistent. As I said in my previous videos, I want a balanced lifestyle, and all I want to do is trade a couple hours a day, make 500, 1,000, 1,500, and call it a day. That is all I'm looking for. And every trader has a different goal. And for me, the goal before was to grow exponentially and have huge size and go above and beyond for trading. For me now, I want to keep it as consistent as possible, reduce as many emotions as I can, and make sure that all of the pillars of my life are being checked off, and not just the trading part. Because once you start dealing with big sums amount of money, the energy becomes so heavy inside of you, and you start becoming stressed, and you start dealing with emotional problems, and you're also not sleeping, not eating, and there's so many things that come from that. And I have gotten a lot of comments with new beginners saying 27,000 isn't a lot, or 30,000 isn't a lot, or I feel like that's just not enough and I'm not making enough money. But trust me, everything adds up. $100 is 48,000 on the year. $500 is 130,000. So always keep that perspective, and that is the perspective that I now have. I use around 10 to 15,000 per trade, and I don't change the sizing based on how good the setup is. To me, every day is almost like the same setup. I am always looking for the same exact entries, same exact exits, same risk, and I like to keep things very routine based. That is just how I operate and how I feel the most comfortable trading. So I don't change it. I keep it the same. I keep the risks the same, I keep the hard stops the same, and I just repeat it the next day. I don't want to feel like I have to adjust my size, second guess myself, take big losses, have to make it back. There's a lot of things that go into trading with big size. So I want to keep it as simple as possible, especially for the time in my life that I'm in. And the expectations might change based on each trader, but right now I feel like this is the best strategy to learn as a beginner, especially if you want to keep it as simple as possible and not go and not think that making a few $100s a day is not enough, because not a lot of traders out there are saying that. So every trade gets the same treatment from me. Now moving on to risk to reward, and I'm sure you guys have heard this before, or if you're a beginner, you might have not heard this before, but this is very important. Risk is what you're willing to lose, and reward is how much you can make on a specific trade. So what does 2-to-1 risk to reward mean? For every $1 that you risk, you make $2. So for 3-to-1 risk to reward on $100, $100 is what you risk, and $300 is what you make. That is the explanation of risk to reward. How I like to treat risk to reward. I like to keep it the same for every trade. I like to slide to strength every single time. I like to make 10% and 15% every single trade. So once I get in the trade and I am risking 2%, I like to keep this as simple as possible too. If I have 10,000, I am only looking for 10 to 15% every single day. I'm not looking for 50, 60, 70, 80%, because sometimes the moves can give you 80%, and sometimes these stocks can go from $2 to $10 a share in a few hours, but that is not the consistency that I am looking for. Looking for your reward to be a lot bigger than your risk, because if you end up risking a lot more and having bigger losses, then your gains are never going to cover it, and you're going to end up possibly losing your account.
So this is SGMT April 27th of this year, and this is how I check my risk. How many times has a stock held the same level? So here's 1, 2, 3, 4, 5 times, and then at the open it held that same level once again. So now that's very important for me. Then once it reclaimed, that is when I longed, and I was risking 80 cents a share, but then I moved my risk up when it started holding more levels at higher prices for a potential to make $2 a share.
Risk management is the most important skill you can learn as a trader. What is your number one risk management skills? Share it in the comments. And if you want to learn more on how to trade like a professional, subscribe to the channel.